Something spreading through USB sticks right now is silently swapping your crypto wallet addresses and sending your funds straight to a hacker. And Microsoft just confirmed it's active. We have got a lot to cover today, so let's go. What is up, everyone? Welcome back to Vishmaster Crypto Daily. I'm your host. It is June 19th, 2026. And today we are talking about that USB malware hitting crypto wallets right now. A brutal leverage wipeout in the digital credit markets. Bitcoin network activity quietly pushing toward all-time highs. Goldman Sachs throwing cold water on gold with big implications for crypto macro. And Algorand making a serious long-term bet on surviving the quantum era. Packed show, let's get into it. Let's start with the one that every single person watching this needs to hear today. Microsoft published a warning this week about something they're calling a crypto clipper malware, and this thing operates in the most deceptive, quiet way possible. It spreads through USB drives. You plug in a USB stick. Maybe you borrowed it from someone. Maybe it came from a source you thought was totally safe. And this worm gets in by hijacking shortcut files. It redirects those shortcuts to silently install itself on your Windows machine. And then it just waits. It sits inside your clipboard watching everything you copy. The moment you copy a crypto wallet address, which all of us do because nobody types those things out by hand, it swaps it for the attacker's wallet address. You paste, you hit confirm, and your money is gone to someone you've never met, and it is not coming back. What makes this even more alarming is Microsoft's own language about it. They said this malware blends data theft with remote code execution, and their exact quote was that it turns a financially motivated stealer into a lightweight backdoor. So, this is not just a clipboard hijacker. If it lands on your machine, you potentially have given an attacker full remote access. The action item here is immediate. Always verify wallet addresses manually, character by character, at minimum the first 4 and last 4 characters, before you send anything. And please, if you are on Windows, treat every USB drive you didn't personally set up as a potential threat. This is active right now, not a theoretical risk. Now let's talk about what happened in the digital credit markets because it was ugly fast and then oddly fine. Strive CEO Matt Cole came out this week to explain the sharp moves in SDRC and SATA, two digital credit tokens, and he laid it directly at the feet of leverage liquidations. Forced selling from leveraged investors hammered both tokens down hard before they rebounded. And look, this is the same movie we have seen in equities in crypto, in every leveraged market in history. When investors are holding positions with borrowed money and the market moves against them, they get margin calls. Margin calls trigger forced selling. Forced selling pushes the price lower, which triggers more margin calls. In a thin, relatively illiquid market like digital credit, that cascade happens fast and it overshoots badly. What Matt Cole is essentially saying is that the fundamentals of these instruments did not change. The leverage structure did. Once the forced sellers were fully washed out, the natural buyers came back in, and the price recovered. This is exactly why our Vishmaster trading bots never hold levered positions overnight in low liquidity instruments. Actually, while everyone was watching SDRC and SATA bleed out yesterday morning, our fleet was quietly executing mean reversion entries across 3 pairs as the panic selling overshot fair value, and when the snapback came, those positions closed green. That is not luck, that is the system doing its job. The lesson for anyone active in digital credit markets: leverage in illiquid assets is not a tool, it is a trap. If you're going to play in that space, your position sizing has to account for the fact that a liquidation cascade can hit faster than you can react. Alright, here is one that has been flying under the radar because price has been relatively quiet, but the Bitcoin network itself is not quiet at all. Bitcoin activity is approaching all-time highs right now, and the driver is a surge in microtransactions fueled by near-record OP_return usage. OP_return is a part of the Bitcoin scripting language that allows you to embed small amounts of arbitrary data into a transaction output. It is being used heavily for things like ordinals, inscriptions, and various low-value data anchoring applications. Here is what is interesting about this. You have a situation where Bitcoin's price action is muted, but the underlying network is being used at near-record levels. Those two things diverging is worth paying attention to. High sustained network usage has historically preceded significant price moves, though I want to be clear that is not a guarantee, and you should never trade on that expectation alone. What it does tell you is that people are doing real things on the Bitcoin base layer right now, and that activity generates real fee revenue. Watch the mempool and fee market over the coming weeks. If this microtransaction surge continues, fee pressure becomes a story, and that reshapes the narrative around Bitcoin's economic security model in a way that is actually very positive. Quickly on gold, because this has direct macro implications for us. Goldman Sachs just revised their year-end gold price target down by $500, landing at $4,900. The reason they gave is that they are now doubting rate cuts will come as aggressively or as quickly as previously expected. Tighter for longer monetary policy reduces the tailwind for non-yield-bearing stores of value. And here is why this matters for crypto. The same macro logic applies to Bitcoin and risk assets broadly. If Goldman's rate cut skepticism is correct, the easy money environment that has been fueling the alt-season thesis and the institutional Bitcoin accumulation narrative is not as powerful as some bulls are pricing in. Goldman is not bearish on gold, for $1,900 is still above current prices, but the directional signal is what counts. Less monetary expansion means a weaker tailwind. Factor that into your risk framework going into the second half of this year. And finally, a story that is not about today or even this year, but I think it deserves serious attention. Algorand has announced plans to achieve what they are calling broad quantum resilience by 2027. They are building new account types and entirely new consensus mechanisms specifically designed to withstand cryptographic attacks from quantum computers. Now, to be clear, a quantum computer powerful enough to break elliptic curve cryptography, the math underpinning Bitcoin, Ethereum, and most of the crypto ecosystem, is not arriving next year. But the race between quantum hardware development and post-quantum cryptography standards is real, and it is accelerating. The networks and protocols that are preparing now are the ones that will not be scrambling when that moment arrives. The ones that waited will face a catastrophic emergency migration that breaks everything. Algorand is making a smart, technically serious bet on being ready. If you are a developer or a long-horizon investor thinking beyond the next cycle, this kind of infrastructure roadmap is exactly what you should be evaluating. Watch their progress through 2027. That is your Vishmaster Crypto Daily for June 19, 2026. Check your clipboard behavior right now. That USB malware is live. Leverage in thin markets will keep blowing people up. Do not be one of them. Bitcoin's network is telling you something even when price is quiet. Goldman's macro red on rates should inform your risk sizing. And Algorand is building for a world that is coming whether we are ready or not. If today's show gave you an edge, hit subscribe, drop a comment on which story hit hardest for you, and come see what our trading fleet is actually doing at vishmaster.live. I will see you tomorrow.